Hello, good evening. You've tuned into ET Now and this is News Now. I'm Varun Hiremat. Let's get on with the show. We're going to begin with ICICI Bank, which just put out its earnings not too long ago. It was a fairly decent set of results on many accounts, far ahead of brokerage expectations. Profit came in at 4,940 versus last year's 4,100 and beat the ET Now poll of 4,500 by a good 10%. NII came in at 9,900 versus last year's 8,500 and last quarter's 9,300. So even on the NII front, our poll was 9,300, so it beat that as well by a good 6-7%. Asset quality has sequentially improved, and what's encouraging is the pro forma spike that you see in ICICI Bank has been slightly lower than what we've seen for some of the other banks. Of course, your provisions have been high this quarter, pretty much moderating just by 100-200 crores Q on Q. 3,000 crores of contingency provisions have been made for the SC order NPAs. And the provision coverage on a pro forma basis is at a healthy 77%. So my key takeaway is that despite higher provisions, your profit has still outperformed based on what brokerage is thought. Of course, that's been led by retail loans that grew 15% YOY, and domestic loans as a total grew 13% YOY. Fee income made a strong comeback this quarter, 3,600 up 15% sequentially, and just about up on last year's 3,596. One grey area is around resolution, which the bank has invoked for 2,500 crore, and that includes around 880 crores of accounts not classified as NPA. So we'll be looking out for some commentary on that. But before we delve any further into the numbers, now that I've given you the headline items, we are joined by Krishnan ASV from HDFC Securities, who's going to help us dissect this result further. Good evening, Krishnan. Great to have you on the show, and thanks for taking out the time to chat with us this evening. What's your first take on the numbers?
I mean, thanks for having me on the show as well. So, fairly impressive on most counts. As I said, the pro forma numbers are not very alarming. The spike that you see sequentially from September pro forma to December pro forma is within threshold limits. It's not a very sharp spike. They have utilized a little bit of what they had earlier provided for standard assets. So I think about 1,800 odd crores that they have utilized from that stock of earlier provision. And to that extent, I think the standard asset cover that they had at nearly 2.2% is now down to about 1.5%. Right? And other than that, the only other area that I can think of is the BB and below portfolio. In this environment, that's gone up a wee bit. Those are probably the two areas that I would watch out for more commentary on. But other than that, as you captured in your thoughts as well, fairly impressive on many counts.
Thank you so much for giving us your take on those numbers. And, like he just flagged off, there is some, the provisioning has gone down in the standard assets, and the BB book are two areas of concern. Otherwise, a very much in line result. Thank you so much once again, Krishnan, for joining us on the show. We really appreciate it. So that was ICICI Bank, of course. We'll be getting brokerage notes on those over the weekend, and we'll have loads of updates for you regarding that Monday morning. But coming back to something that's just transpired last week,